Hey, folks, it's Ted. You're watching the Business of Cyber show, and I'm super excited about the topic that we have today. It's cybersecurity mergers and acquisitions. Now, whether or not you're a cybersecurity practitioner, whether you're a CISO, whether you're an investor, or whether you're a product or service company, this is a big topic because it ultimately plays into what I think is a major driver of your overall cyber program, and that's your budgets. How do we tie budgets? How do we tie that to cyber mergers and acquisitions? Well, that's what we're going to get up and talk about today. We're going to talk about money that comes into the market. We're going to talk about companies that get rolled up into larger companies. We're going to do all that. And to help me do that, I'm going to be joined by a really special guest that I've known for the better part of about 5 to 6 years, and I'm excited to introduce him here shortly. Just an agenda for today. Remember that if you have a comment, you can actually submit that comment on the feed, and we're going to be able to see it. And if you want that to be seen by everybody, make it a really interesting topic or interesting comment, and we'll throw it up and talk about it. Remember, the business of cyber was created because there aren't enough resources within the critical sector markets to drive cybersecurity maturity and improvement. And when we talk about resources, we're talking about the people that we have, our teams. We're talking about the energy levels that they have, the amount of time that they have. We're talking about time in general. How much time do you have to deploy on your product and your service roadmap? And then finally, what about budgets? Everybody says that they need more solutions, but they don't always get the budget. So really excited to talk today. I'll be joined by a special guest named Nathan Fink. And Nathan, it's a real pleasure to have you today. Where are you calling from? And thanks for joining.
Thanks, Ted. I'm out in California and look forward to chatting more about the M&A space.
Absolutely. Absolutely. Well, if I just throw up a little bit of a slide, I'd love to for you to tell the world a little bit about your background and maybe even how we met, albeit we were working with the same company, I think, at different times, and kind of your past with mergers and acquisitions or deals in the space in general.
Definitely. Yeah, I think like most in this space, somehow they either know or touch or relate to Shell. So that's where my career started, and we had some overlap, but then obviously a lot of overlap after that. Unlike most you probably talk to in this space or in this category, I'm not a cybersecurity expert by any means. I'm not even from the space. I'm a deal and transactions person. So I spent over 10 years in commercial deal making with Shell and across kind of the energy space, industrial space, and a few others. In there, I cover it as commercial deal making as broadly because it incorporated a lot more than just M&A. We did things from incubations to spin-outs to just pure new business development, which mean partnerships. And so really got a good grasp of why are companies doing what they're doing and kind of what's the broad set of toolkits out there. And so spent a lot of time in that, was working on some things in the resiliency and kind of resiliency as a service. And as you would imagine, cybersecurity is such a critical part of resiliency and uptime. I was working with a couple colleagues that had come from the space. And that's obviously how you and I met. And I just started to dive a little bit deeper into this thing called cyber. Probably like most, I was like, okay, what is this? And what's all these terms, IT, OT, and everything in between? And spent a couple of years really just digging in and understanding the space a little bit more and able to talk and understand how M&A applies to it.
Yeah, that makes sense. I mean, M&A is not something that it's not a new terminology. It's not a new function, right?
Yeah.
But for cybersecurity, I could understand, and we've talked about this, about why M&A is so hot or has been hot and will continue to be a hot topic in cyber. And isn't that because of just the general market and how many cyber solutions are, how big of a need there is across the globe? Is that kind of why you were interested? Is it market growth and opportunity to dive into cyber in particular?
Yeah, to dive into cyber in particular, it was a combination of market growth, opportunity, but also just the dynamics within that market. So you touched on a very important part is when you have kind of point solutions, we found ourselves saying, if you took this piece and put it with that piece, or if you took this technology and put it with that service, it creates something interesting. And those are the types of things that M&A comes into play to say, okay, here's a broader solution that we're trying to build. And how do we take these different things that are out in the market and combine them together in something that's more advantageous to the end customer. And so
Wow.
when kind of looking at the space, that seemed like a solid foundation, that there was a lot of good technology, a lot of smart people, but is there a way to maybe pair some of these things together that make it a little bit more advantageous for the end customer?
Yeah, it's good. Well, there's 5 or 6 questions that I thought would be strategic and high level enough to drive interest from a lot of different players, but I hope that we can add some real specifics in. And the first one is for those that are either new to the term, or maybe haven't ever been a part of a merger or an acquisition. Can you help the audience understand what is an M&A? What is M&A in general, and kind of what are the core purpose of it in a given market set?
Yeah, and I think this is important, even for deal makers to remember, is M&A is one piece of a large toolkit that a company has. Effectively, what M&A is, it stands for mergers and acquisitions. So the merger side is taking two companies that then kind of merge in together, and both continue to own equity in that business, or an acquisition may be a one company buying another. But ultimately, it's how do you combine two companies from a commercial perspective. Now, this is just one piece of a lot of different options you have to do. You could do a commercial partnership and still get the same value, arguably, that you would get through M&A, and it doesn't necessarily mean that you need to change ownership. You could also, for example, get a minority equity investment from a strategic into your business and pair the commercial partnership and end up in the same spot. And so I think a lot of times M&A is kind of oversimplified as, hey, it's this thing that we do. And why do we do it? Well, because we have M&A teams and there's budgets of where to use capital to kind of grow. But fundamentally, M&A is how do we take two things in the market, get them to work together in a little bit different way. That way we can have something. And that something might be a competitive advantage over another company in the space. So let's say, for example, you're an OEM competing against another OEM and you want to buy a technology to make it proprietary into your own business suite. It also might be folks that have a solution that really need to be partnered with something else in that sale. That way, when the end customer is buying it, it's more advantaged. And so, again, I think M&A just is a term that's often overlooked. It's simplified in a lot of ways, but there's many, many reasons why a company would be looking to go through effectively what is a transaction and change in the way that they'll operate.
Yeah, it's a really great overview, and I think what you're asking the industry to do is like really think, how can two companies coming together, 1 + 1 equals really 3.
Yeah.
Whether that's a differentiation, whether that's some sort of solidified offering. How often do you see, loaded question here, how often do you see mergers and acquisitions happening just because we have to get some deals done and because that company may be not doing great? Out of all the deals that you've looked at over time, there's a subset, I'm sure, that had really great synergy, really great leadership at the forefront saying, I envision this offering in the market. How do we go and do that? How do we build that? Versus, hey, we've got to do some mergers here. Or maybe it didn't come together so strategically. How would you say the market is carved up in actual execution of M&As at that kind of foundational level?
Yeah, I mean, there's a lot of resources out there that touch on this, but majority of the time, M&A is not successful. And there's a lot of reasons it's not successful. It could start all the way from the beginning of there just wasn't a solid strategy. You didn't know what you were buying or why you were buying it, but you were just buying it. And they kind of call that the deal fever, where people look at it and they say, I haven't done a deal for a while, or we've got a lot of money, or whatever it may be, and I need to go transact. And oftentimes what you'll see is people rushing into something that doesn't necessarily make sense. On the flip side of that.
And just a real quick, you're defining an unsuccessful merger and acquisition, I'm assuming, as we thought we were going to be able to pull these two companies together and capture X amount of market space, and over time it just didn't materialize, right?
Yeah. So some type of non-materialization of whatever that objective was. Because sometimes the objective may not be to, honestly, it may not be to generate revenue. It may be just to control the technology. In which case, that would be deemed successful if you did it. But to your point, most of the time people are looking at, if I buy this, am I going to make money doing it? Am I going to add value doing it? All those types of things.
Okay. Yeah, didn't mean to interrupt your point. The other half of the equation is, what do they look like?
Yeah, just the whole challenge that, for more of the operators in the discussion here of what is integration and how do you deal with companies that have different cultures, different reporting lines, different processes. By definition, unless it's a merger of equals, it's going to be a bigger company being acquiring a smaller company most of the time, and that often comes with changes. And so I think those things are often important and thought about more by the integration teams than the deal teams, but a key driver for whether or not these businesses and that are acquired become successful.
Yeah, makes sense. Makes sense. So how long like if we think about the M&A process, right? Just kind of transitioning to how does an M&A go from, and let's just talk about the perfect scenario. You've got a strategy to an actual closed deal to integrate. Can you just walk us through kind of the process of the average M&A and maybe how it's different in cyber?
Yeah, I'd say in terms of the second question, in terms of how it's different, ideally it's not different. When you break it down to the fundamentals, there's basically three main stages, which is the pre-deal, the deal itself, and then the post-deal. And that's the way I generally like to think about it. One, because it makes it a little bit simpler. But two, like those are largely what is driven by different work teams and groups. And the pre-deal phase, to the point you just raised, is a lot about strategy. So why are we doing this? Why is it M&A? Why this company? What does it unlock for us? All those types of questions. And some groups are very, very good at that, and they spend a lot of time internally as the acquirer figuring that out. And then they go screen a bunch of companies. And by screening, that means they go out and they figure out who's in the market. They understand them and kind of work from that perspective. That's someone that's, I'd say, more programmatic in terms of their M&A process versus what I'll call opportunistic, which would be, I had a banker call me, or I had a friend call me and tell me about this company. I don't know too much about the space, but I think it's interesting and I'm going to look at acquiring it. And so what we tend to see, or at least should see, is that corporates should have a good strategy. So your corporate buyers as a group should have understood where it fits into what they're doing, landscape the space, and all of that. There are groups, maybe more the private equity buyer group or others, that maybe say, I want to do something in business services, or I want to do something in industrial services. And in one sense, that might mean, a reliability company, and others, it might mean an OT cybersecurity company. And they kind of look at that as an overall category.
Yeah. I think in cybersecurity, since, I don't know, 3 or 4 years after owning a product company, you get all these emails constantly from folks that they'll be very straightforward. They'll say, hey, look, we're looking to buy a business that has these kind of core metrics that serves this kind of market. And so I do believe that there's a group that I wouldn't call them late movers, but they're folks that probably didn't get in on investment rounds or equity rounds in some of those earlier stages, and they're looking for later stage companies.
Yeah.
To me, in OT cybersecurity, I would say that has grown in 23-4. In my own personal email, 4x, maybe 3x. I don't know if that's based on market or if that's based on maybe something a little bit more specific to my world. I have to imagine that a lot of other CEOs are getting those emails as well. What do you see right now from a market perspective that would point towards more or less strategic acquisitions by strategic corporate players, or more of the latter that you just talked about, maybe PE companies that are saying, hey, we really want to get some sort of capability in that market because we think it's growing?
Yeah, I mean, macro can always separate from the micro environment for sure, but I think just in the top level of deal making is 2022, 2023 was a period of a lot of uncertainty, higher inflation, things like uncertainty what the Fed was going to do with raising rates. And so just deal activity across the board kind of came down. And then on the flip side of that, if you look at the headlines, there's just a tremendous amount of stuff out there on how much dry powder is sitting there with private equity firms that need to deploy, how much cash is on balance sheets of corporates that need to deploy.
Right.
And so I think there's a little bit more clarity. There's still not as much clarity as we would hope, given, I think if you look at the predictions of how many Fed cuts there would be this year, the number was 7 in January, and that's come down drastically since then. So the market's still figuring what north is from that perspective. But people are looking at it and saying, I'm not paid to sit and not transact. And that's largely what deal makers are going through. And they're saying, okay, I need to just accept those risks and get into markets that I think make sense. I think given all of the tailwinds in cybersecurity, and particularly OT cybersecurity, that people are trying to figure out, what do I do and where do I play? As we've talked about before, there's a lot of companies out there, but it's almost a bit of a barbell in terms of the companies. You have a lot of smaller individual technologies that aren't necessarily at scale for certain buyers, and then you've got a handful of larger ones, and there's this sweet spot in the middle, which is a much more attractive bite size, we'll say, for acquirers, that then they're trying to go and say, I know there's other buyers coming into this space. It's my competitors, it's financial firms, it's other strategics, which can be a wide range of groups. Where do I want to play and how do I want to play? Because unlike something like the beverages space, where there's 15 water companies that you can go buy and they all kind of look the same and fit into your portfolio, when you look at the breakdown of cybersecurity in terms of size, capability, differentiation, there's not really that same depth in the bench when you're looking for a particular type. And by that, I mean, I'm looking for a company that's doing 20 to 30 million in revenue with this type of customer base in the US. It's a little bit different in terms of what companies see. And I think the buyers have realized that, and they're trying to go out, get ahead of it before others do, and say, how do I go fit into my strategic puzzle this technology and this solution? Because if I don't get the right one, the chance of me finding the right one after that may not be as easy or as advantageous as I had hoped.
Yeah, it makes sense. I mean, it's interesting. I've seen investors. I've also seen potential acquisition, discussions. There's this thing that I know, a strike range, right? Like, this is the kind of deal that we're looking for, size of company, general amount of revenue. I've seen that strike range move up and down a lot.
Yeah.
Whereas before 22 and 23, I mean, it was laser focused. It was like, this is exactly what we're looking for. This is the exact value prop we're looking for. This is the exact mix of services and SaaS. And this is the exact mix of hardware versus software. I see that market kind of loosening a little bit. Do you concur? Yeah. And what are the macro drivers that we can look historically to say, when would that strike range or aperture tighten based on what macro trends?
Yeah, I think it's one. I agree. I think it is spreading, and I think it's spreading by a combination of things. One is your buyer base is also changing, and when your buyer base changes, there becomes a lot of different things you can unlock, which by definition will widen the range. So you're where you might have gotten a good example of this is what we saw in insurance, right? Insurance largely was just talking about cybersecurity, which by definition, they were thinking IT security. It wasn't until about, a year or two ago, we started to see OT specific policies and people thinking about, what is OT and why is it different from IT, as an example. And so you're going to get a set of buyer groups that come in that have different value, leverage, size, all these definitions, and that are going to be there. And I think those buyers will stay. They've gotten past the what is this. Now they're kind of in the where do I want to play and how do I want to play.
Right.
And a lot of them have jumped past the should I play. which I think is the question of will it narrow again. And so I think you're spot on in terms of what's happening in the market. We see a wide range. We'll continue to see a wide range. I think the only way that it will narrow is in terms of what the sell side's looking to do, basically the companies that are in it. And so if you're, for example, out there looking for 50 to $100 million, revenue companies that are doing consulting, as an example, then the answer of if there's not very many in that bucket, then you're going to change and focus to what companies are out there and what size they are and how they operate. And so I think the buyer market will adjust to what's available on the sales side over the next couple of years as people get more comfortable with what's going on in the space. And I think all of the macro pieces of not really transacting or not certain to transact will either just be accepted. We know we're going to be in some higher interest rate environment for longer, and it is what it is. And so I don't think those are going to be as much of a driver as they were over the last couple of years.
It's almost as if, I mean, I think if you're savvy and you just think about the cost of capital, then you can put a 3 to 5 year plan together with options. And I think fewer people did that. I think a lot of people knew in 2022, I'm just talking about the OT cyber market.
Yeah.
I think that it's a separate conversation, but I think the way that a lot of new companies have been funded and where the funding went and how much funding there has been, I do think that it forced companies to be really self-reliant over the course of the last 18 months. Yep. And now a lot of companies are saying, hey, there is uncertainty and they don't know where they want to go. I think that I read an article that my CFO sent me the other day that said, look, companies are bought, they're not sold, because if you don't have a strategic buyer, then if you don't have a private equity buyer or if you don't have a new investment round coming, because that side of the market isn't playing ball, then you're never going to sell your company, right?
Yeah.
It's interesting, and it's a separate conversation about the predictions of where the OT market's going to play. But one big thing that you and I have talked about is how a deal is sized, right? Is it all about the quality of your revenue, the concentration of your customers, the niche aspect of there's 100 ways you can really slice this pie. One thing you kept coming back with in previous conversations that we've had is market size, right?
Yeah.
And so when we think about how the market size influences M&A, can you explain that in layman terms and why that's such a maybe overlooked item, but it might be one of the biggest items for value?
Yeah. I mean, I think the way I think of it is it's the guardrail. And so when you take it to an extreme, it's a lot easier. I think to put it in perspective, which is if you have, for simplicity, a $10 billion market, can you have a $100 billion acquisition? And when you have these really, really large and addressable markets, which oftentimes just get collapsed into, for example, cybersecurity is a perfect example where IT and OT are put together and people just say, this is the size of the cybersecurity market. Then a lot of people just look at that and make a decision of, oh, it's really large. And they don't necessarily start to break down what does that look like. And we've seen this for sure in the cybersecurity side of, okay, we'll take that and split up IT versus OT. And then within OT, split up services versus product and the variety of things. And what you find is you take this, what is hundreds of billions of dollars type market, and you really start to address it down into something that's smaller. Now, in that smaller piece, it's not necessarily bad. But again, it runs you into the question of, can a buyer justify going in and paying a very, very large purchase price, or a purchase price that's let's say even semi close to what the market size is? And the math they'll start to run in is, how big does this company need to be? How much market control does this company need to be on my upside? And what am I controlling? Do I need to control effectively the market size, which for an acquirer is extremely difficult to do? That requires, education, growth. Like that's right now what the whole market's doing, is trying to grow that. Or am I trying to take a piece of that market and just grow its market share. And so as you get to the bigger acquisitions, the companies that have been funded, there has been, I think, an assumption that if the market's bigger, you'll be okay. If the answer is no, then your only other option there is how much of that market can I take? And there are limitations to that. We see monopolies out there, we see duopolies out there. Those exist, but you really then have to be playing that game from a market size potential if you're, let's say, paying very large amounts in markets that are much smaller.
Yeah. It's really interesting because I think that the OT market, they always say if you can describe it in its most simple form and a 5-year-old can understand it, I'd put anybody up to the challenge of trying to define what the OT market and the size is and who the core buyers are. I also believe that is why you have some niche players that have a really, really good understanding of that market, and they're just successful companies because they have that going for them. I want to take a different perspective, and maybe this will point back to your days at an operator. When we think about the actual buyer of products and services going through an acquisition of one of their prized products or services, right?
Yep.
How have you seen the asset owners win and lose? I mean, obviously, if the company scales up and it has more product dollar or more dollars that it can funnel into product development and service in the form of maybe customer service or customer support, that's a win, right?
Yeah.
But then can you just kind of walk us through because there are asset owners watching this show that say, this is all great, but I'm not selling a company or buying one. I'm using this stuff. How should they be viewing mergers and acquisitions in their own kind of go to cyber roadmap?
Yeah, I mean, for the pure operator, it's a question of what does it unlock. And I have a personal belief, and I know some don't believe this as much, but especially for heavy industries, oil and gas, power utilities, technology, if you have to balance the value from technology versus the value that the asset captures, the value that the asset captures is order of magnitude higher, just by definition. So what these operators have is a huge value capture opportunity by deploying the technology or owning the asset. And they've got then this technology that they need enabled. And I think you pointed out well, if you've got a team of, let's say, great technology that does a lot of enablement, you're a global energy company, and you look at it and say, I can either let this thing kind of sit and do its stuff, but it won't be able to serve me globally, which then means I'm bottlenecked in terms of unlocking my asset value or growth in other regions where they can't scale. And so what they'll do is they'll look at it and say, how do I get that enabled? One piece may be to go to a close service provider and say, hey, obviously these discussions aren't public, but I need you to go buy this and integrate it. That way you can deliver it to me as scale for my operations. Others might look at it and say, look, I'm just going to buy it myself. And we've seen many examples of what effectively are asset operators, asset owners buying or enabling into service businesses because they want that capability to go unlock in their asset base. And so I think both of those still remain a very viable path, where what you'll have is somehow taking a technology and, exactly to your point, throwing a lot more resources in it, being able to scale it. That way it can get deployed across a much larger asset base to unlock the value. And that's effectively where a lot of these companies are underwriting it. And we'll probably talk about it in a minute, but that's also a big discussion on how these companies are valued, because we see these disconnects of, okay, we've got this technology, it has some inherent worth as it stands today, but if it comes into our ecosystem as an asset owner or one of our service providers that's much larger as ecosystem, then we can really utilize it at scale, which then opens up with the amount of value that you can capture from that particular company or that particular technology.
Yeah, to me, I think that the average asset owner in critical sectors, let's call them operators, asset owners, I think their aim to reduce their vendor count, their aim to tie all their activities to some major business outcome,
Yeah.
and the overall draw on available personnel, just because of the cyber brain drain,
Yep.
is driving asset owners to say, hey, we need fewer solutions that are more digitally connected, that serve more of, my entire solution that I need. And I think that solution providers, that's why I also think a lot of service companies were acquired over the course of the last 2 years.
Yep.
I think that the world is looking for more of the entire suite of delivery mechanisms. And my personal belief, I don't know if you agree, I think that the largest asset owners, the top 1,000 out there, they're actually quite influential in M&A, because they're actually going to their large customer or their large vendor bases, and they're saying, we need this capability.
Yeah.
And those vendors, which are actually, multi-billion-dollar organizations, are actually turning to the market and saying, okay, small companies, how can we go and deliver that collectively? And so specifically in the cyberspace, I think that's what happened. I think you have a lot of point solutions, and your original thought on tying a lot of these together to make 1 + 1 = 3 or 4 or 12, right?
Yeah.
It'll be very interesting to see how the macro picture drives that strategy. But that's kind of where I think the asset owners are. I think they're in the driver's seat.
They definitely are. And I think, and the space well more than I do, but I think what we see a lot is a tremendous amount of noise. And what you mentioned was perfect. If you have an asset owner which looks at something and says, I've seen 10 companies come in and say they all do the same thing, and they probably do more than they do. And when you ask, what do you actually do? Like, and where is all your revenue coming from? It's probably one of the 10 things that they told you they do.
Right.
And they don't really have the time or the focus or the resources to then figure out what everyone's actually doing and then figure out how to get them to work together and piece together. They want someone to do that for them. They want that integrated piece, to your point, because they don't want 10, 20, 30, 40 vendors when they could just have a couple. And I think people have identified that. And candidly, it's one of the reasons I started looking at the space. With a couple others to start. Was there's a lot of noise. There's things that could be better off together versus separate. And the buyer is looking for an outcome. They're not looking to be the integrator themselves.
That's right.
And if you can go figure that out, you become a very interesting piece of the puzzle for both the service companies or tech-enabled service companies and then the asset owners, because they can go in and say, I've got the ability to get this broad suite of solutions, which I know, one, they can actually do. They're not just saying we do these things because everyone feels you need to say you can do everything. And then on top of that, they have figured out how they all work together. That way, when I have something come up, I'm making one phone call instead of 10 phone calls.
Yeah.
And I'm making one phone call to someone that actually has the resources, as opposed to 10 where one might be a company of 3 or one might be a company of 4. And so that, I think, is also going to drive a lot of consolidation in the market, which then obviously is a forcing function for M&A. Is how do I take my point solutions, pull them together into something that actually makes sense? Because I think what you see in the market is people that are point solutions have basically been stuck with long sales cycles, because the companies and operators, if they can even get to that stage, are trying to figure out what is this and where does it play and how does it play with all the other things that I'm being sold from a technology side. And then the business folks are looking at it the same way, saying, why do you need to be dealing with so many different things that apparently or seemingly are doing very similar stuff?
It's like we all like to cook, but if we go buy the largest, most complex, kitchen gear, whether it's the sous vide and then all these copper pots and everything, we go and spend all this money on all this great equipment. I think the market has done that, and there's some amazing solutions out there. I think we absolutely need these solutions. I think the challenge that we're dealing with as a market is that a lot of these asset owners now have all this equipment in their kitchen, and they're like, okay, where's all the food going to come from, and who's actually going to prepare it, and then who's going to eat it? And so this entire value chain of cybersecurity implementation, value derived from that implementation, then having enough ample budget to go and deliver on the gaps that are still exist. I think this is the challenge that most sectors probably deal with macroeconomically. When they have something that's really hot that comes into the market that's really valuable and they all run to deploy it real fast, now everybody's kind of taking a chance to take their breath, and they're saying, okay, how do we fit this into a way bigger strategy, whether that strategy is digitization, whether it's resiliency. And I think that drives to your point of where you think kind of the market is. Valuation. I'll tell you that when in the startup community and any sort of business community, M&A is what a lot of founders and company leaders look for to actually accrete value. And they say, I want to increase the value pretty significantly. And they do so to support their investors that help them early on. Everybody wants, to drive that kind of value chain back to the people that took risks early.
Yep.
I don't think that's a very different mentality than I think a lot of your actual acquirers are looking at. You said, how big can the market be? How effective does this solution tie into our strategy? I do think that there's often misalignment between the company leaders and that are selling and the company buyers that are buying. And the word valuation is thrown around a lot. Could you explain how companies are valued in M&A? And maybe we drive a discussion off that.
Yeah, I mean, it's a complex question. I remember when I first was in school learning it, they said, you run a DCF and you apply multiples and you do all, and there's this very complex formula, and then you take that amount, you multiply it by 0, and then you put it at whatever price you want to pay. And I think that's a good reflection of largely what the answer is what the buyer will feel comfortable with, because there are different methods that you look at. It's going to depend on the buyer type. The easiest way to do is what they call a discounted cash flow of that business. By definition, that must mean you're making cash flow, which a lot of these companies may not be. And so the question really for valuation will depend on the buyer. So the private equity realm may look at it just from a multiples perspective, largely because they don't have an asset particularly that they're capturing other value from. And so we've actually talked to a lot of folks that want to go roll up technologies in the space, but when you actually talk to them, they're like, I can't buy technologies that are losing money or scaling. And so it's a very particular thing that they want. They want kind of a solid growth, profitable business. We see consolidation and roll-ups on the services side as well. And those companies, it's very formulaic. They're saying, I'm going to buy something for 10 times EBITDA. I'm going to roll them up together and ultimately sell them for 15 times EBITDA and make their return. And the market will dictate what those are. It's kind of either a metric against revenue, meaning a revenue multiple, or an EBITDA or free cash flow. When you step outside that into your corporate buyers, valuation can mean a tremendous amount of other things. It could be just what price do I need to get the deal done? And that's the one people tend to not like to talk about just because it's the most difficult to justify. But when you think about it, if you have a one-of-one asset that's in the market and you've got 4 bidders and you need that asset to unlock something else, it's just going to go to the highest bidder bidding. And you're not really going to have a formula around what the valuation is.
Yeah. It's not as process oriented. It's more value oriented long term, right?
Yeah. And there's no equation. It's just what level of comfort do I have? And then what triggers do I have that play into that? And there's a lot of factors of what that may be. It might be if you have a VP, we've seen this as well. You have a VP that has internal authority up to a certain purchase price. Well, you'll never guess what the price that they're going to offer is. It's whatever that VP can approve, because they know if it goes above that price, then they're going to have to go to someone else and get more approval. So that's one characteristic of it. It could just be what's the spend and allocation of other companies in the space. And these are typically what I would call the sub $100 million acquisitions,
Right.
is looking at those. And it really just comes down to how much can we justify to spend on this and feel we can make up on the backside value. And so that's I'd say the two ends of the spectrum. You're either very, very formulaic in the sense of these companies need to trade against a multiple, or you're looking at it and saying, we need to get this thing, and what's a price that we're comfortable paying and going to unlock value in other ways for it.
Yeah, and I think it comes down to who the buyers are, what their kind of strategic perspective is. If you think, you've talked about this over and over, and that is, if you're buying a company or you're acquiring a company for a strategic purpose, that makes a lot of sense. But that strategic purpose would be on like the roadmap of the acquiring business, yes? And
Yeah.
they're looking at trying to, maybe based on customer feedback. How does a merger work in the same capacity? More or less the same? I'm just curious. Doesn't that having additional players play in and complicate the situation a little bit? How do deal makers approach that?
Yeah, I mean, a merger could be just two large players in the space saying we need to come together to get a better solution to then go get acquired. And so it a lot of times you run into, and I don't mean a bad way, but like no man's land, where you don't have enough of a product suite to justify your price,
Right.
but you also need to go justify that price because of how people have funded it. And you'll just go look at others in the market and say, can we merge together and then be worth more as a joint offering than independent offering? And that's really where the merger side of it's going to come into play versus, the operator's just going to acquire whatever it is. The service provider is just going to acquire whatever it is. And so I think the merger side is going to be people in the space looking and saying, either one, I can't get the price I want and or need to justify the amount of money that's gone into the business. But how can I go and merge, which, you can merge and do share swaps. There's a lot of structures you can do to merge that don't require money being deployed. That way, then we can get something that gets us in a more attractive acquisition point, or kind of a different buyer base or size or variety of things. That's probably where the merger side will come into the space over the next 12, 24 months.
I can think last 24, we've got just, generally companies focused in this space. We got CyberX. We've got Verge. We've got Skate Defense. We got a couple other smaller ones that the deal terms weren't released. I would say my data indicates 8 maybe on the OT side, something like that.
Yeah, sounds about right.
And that's pure play acquisitions. I'd love for you to comment on maybe some patterns that we see within that. But my secondary question is, have we seen mergers come out of the OT space?
So I think from a headlines perspective, not that I can really think of as much. And if there's one that I'm missing, I apologize. I think where you'll see a lot of the mergers happen is on the smaller side, when you think about a VC-backed portfolio company, where they look at a couple of technologies, which to the point earlier are point solutions, and they say, you guys need to just come together. And I think that's where you'll see the mergers. Those typically aren't announced as much.
Right.
They
So
could be, but
companies.
it's just going to happen. Yeah.
Yeah, and I think a lot of times companies build a certain product suite, and then when they get to market, the customer's like, hey, well, we want this, and this. And It seems like if a commercial agreement ends up playing well, 2 + 2 could equal 5, right?
Exactly.
When you think about, I can't recall off the top of my head what many of these companies that have been acquired all, were sold for. Okay.
Yep.
What are the patterns you see emerging in OT? And kind of to round out our conversation, where do you think mergers and acquisition in cybersecurity OT will be heading in the next 12 to 24 months, Nate?
Yeah, I mean, there's definitely a sweet spot in the $50 to $100 million acquisition price. There are companies that are above that. You pointed out Verve, which was just acquired by Rockwell. I think if you read the SEC filings on that one, I think it was close to 185 million. And so there's kind of that range. Will we see kind of that $500 million plus larger deal, and we know there are privately funded companies are valued at that privately, but will we see those from a acquisition perspective, I think is still to be figured out, and the industry is probably really looking at very, very closely, given there's a handful of players in that space. On the flip side, on the lower end, I think you're going to see a lot of either what we'll call acqui-hire, meaning it's a great team, a great technology. I don't necessarily need to buy the business. I just need to buy the relationships and the people. Or just starting to pull up some of these technologies and fit them into a broader solution, as we talked about before, because you're going to run into companies that are maybe getting kicked out as a vendor because they're moving from 100 vendors down to 20 vendors, and they're looking and saying, I need to just go start partnering with the others that are getting kicked out as vendors, and we just need to consolidate to become one. That way we can go get these contracts and fulfill. And so I think on that side, you'll start to see a lot more consolidation in terms of what the vendor offering is and ultimately what the end customer is driving the market to do.
Yeah, it makes a lot of sense. I think asset owners already have enough on their plate. I do think that they're going to be driving more acquisitions in the market because their demands are so salient on how they want different solutions to interact. I think it's going to be very interesting. Well, I'll give you the final word on cyber mergers and acquisitions. It's been a real pleasure having you on the show. I think that this is a timeless discussion, and it'll be really interesting to talk again, let's say in 18 months, and see if some of your predictions were accurate. I think they are. I think they're rooted in a lot of great data and great experience. So I'll give you the last word, but thanks for being on the show, Nathan.
Thank you. Well, and thank you for having me. I mean, like you said, we've been talking about this for a long time, and I think the biggest thing we're going to see is things are going to continue to be dynamic. We're going to see a lot of different drivers, and I think to do well, it's just going back to fundamentals. If you're a deal person on the M&A side, go back to the fundamentals of why this company, why this structure.
Yeah.
And if you're a player in the space, meaning a technology or otherwise, why this approach and why this company, and particularly more so why this structure as well, of how it's dealt with and valued and all of that. Mm-hmm. And if you're the operator, figuring out how do you navigate this, to your point at the beginning of the call, what are budgets and how do you deal with vendors that are here to stay, and how do you deal with all of that, and what does that mean? And so I think we've gone through a tremendous amount of uncertainty macro level at the last couple of years. We've also gone through a tremendous of funding and cycling. That will continue to happen, hopefully at a little bit lesser of a clip, but no one can ever make that true decision. And I think the winner of the game is going to be going back to fundamentals over the next 12, 24 months. And if you can do that and think about the right structure, you'll be in a good spot. The only other thing I'd say is, I know there's some deal folks probably listening. There's also some operators, some technology folks. When it comes to something like M&A, it impacts everyone. If you're a business and doing integration, you're impacted. If you're a deal maker, you're impacted. And so one thing that I pushed for a long time is step outside of just your inner circle. So if you're a tech person, talk to the business people. If you're a business person, talk to the tech people. Because I think that's really what's going to drive a lot of growth and moving the ball forward for the OT space.
Yeah, that's really great advice, and I tend to agree with you. It's all about teamwork and alignment.
Yep.
I appreciate the time. Have a wonderful week, Nathan.
Great. Same to you.
Thanks for joining the show. Ladies and gentlemen, this has been the 26th installment of the Business of Cyber Show, where we talk about limited resources within the critical sector for improving cybersecurity. Join us next week, 10 a.m. Central Time on Tuesday. Thanks for your time, and thanks for your attention. Have a great week.